Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hi, welcome to the February 1st edition of Basis Loaded with Joe Schmit. I am Joe Schmit. This episode, of course, is produced by Paige Driscoll. We'll call this the Groundhog Day episode, one day ahead of Punxsutawney Phil seeing his shadow and sending us into another 2 months of winter. But prior to that, shocking news. Let's dig into the latest NDPSR report, starting with butter. This butter number came in at 240.85. Now that is a plus 5 to the CME 1 week average of 235.81. The CME traded down 7, NDPSR down 7. So tracking pretty close to the CME. This is the final week of the January pricing. And of course, they went back and revised every butter number that goes into that calculation. Small revisions, but revisions nonetheless, all taking the price down a little bit and adding some volume at the 248-ish level. Final volume for the week, a little bit below our expected 3.5 million. So this is the first time in several weeks that the NDPSR volume has fallen below the 4 million pound threshold. In cheese, this block number, 208.91. That's a minus 4 to the CME 1 week average of 213. So we were expecting lower than normal basis. The CME traded up 13 to achieve that 213 level before trading down 18 the following week. And this is a continuing trend of up-down price action that we've seen at the CME. The NDPSR, on the other hand, was pretty closely pinned to this 212 level. So coming in at 208.91, close to 209, is the first time that the NDPSR has traversed below the 210 threshold. We traded 10 loads on the CME in the blocks that week. Typically, when you have volume at the CME, you would expect lower than normal basis. But I think that the price action at the CME, once again, we're not seeing reflected here on the NDPSR. There's been some rumors that there was a big export deal done at a fixed price, and that's why the price on the NDPSR has been pinned to this 212 level. Volumes have been close to 12 million pounds. We had 1 week well above that level during the January pricing. This final NDPSR for the January pricing period falling below 12 million pounds. So perhaps an indication that the export sale that was holding prices above 210 is ending as the volume drops below 12 million pounds on the weekly total. In barrels, 176.84. Now, barrels have been tracking fairly closely to the CME, maintaining this plus 5-ish basis. So that 176.84 is a plus 5 to the CME 2 week average of 171.48. We averaged a whopping 18 loads on the CME during the 2 weeks that I use for this calculation. The CME 2 week average was down 3.5 cents. Here on the NDPSR, down a little bit more than that. So this break in the barrel getting in quickly as basis narrows to plus 5 in the barrel. In whey, 40.01. That represents a plus 4 to the CME 1 week average of 35.70. Now we traded 25 loads on the CME and that dropped the CME weekly average 5 cents. On the NDPSR, only down 2.5. But what's interesting is if you look back at the January 14th number, which is the benchmark for most of the forward price sales, the manufacturer had to discount almost 4.5 cents to move weight. But move a lot of volume, they did. Manufacturers were able to move north of 5.8 million pounds. So this is the third consecutive week that we've been around that 5.5 million pound mark or more So the manufacturer, they are moving a lot of weight, but having to discount in order to do it under prior week's NDPSR. And then lastly, non-fat, 127.86. That represents a flat basis to the CME 1 week average of 127.95. Now we traded 5 loads on the exchange, so we would expect lower than normal basis. What's interesting about this is a 12-cent decrease from the prior week's NDPSR. And this is the final number for the January calculation. Of course, Tuesday was the final trading day for January non-fat futures. January non-fat futures traded 259 times, which is an abnormally large amount of volume on the final day of trading for non-fat futures. And on that volume, open interest went up. So the selling below value, or what was thought to be value if we were going to maintain the higher than normal basis as the January contract has maintained throughout pricing. So the offer was a little bit below value. Somebody was using something other than prior week's NDPSR in their model to determine that we would see this 12-cent move on the NDPSR. Volume here on the NDPSR, north of 22 million pounds. So it looks like an extra 3 to 5 million pounds went in at the 120-ish level in order to pull that NDPSR price in line with the prices that we are seeing at the CME. So as I said, this is the final week, 4 of 4 for the January pricing cycle, and January is going to expire, January class 3 is going to expire a little lower than we originally thought, 1943, with January class 4 going off at 2001, a non-fat odyssey. If you carry current CME equivalents out through the remainder of the February pricing cycle, currently getting February class 3 of 1795 and February class 4 of 1850. We'll see what they have in store for us at the CME. Until next week, on behalf of Paige, I'm Joe Schmit. Thanks so much. We'll see you soon. Bye.